Good morning. I hope you guys doing well and welcome to today's edition of the London Session Open. Today is March 19th and it's 9:30 a.m. in London when I'm recording this market update. It is, however, 5:30 p.m. in Hong Kong, where I am right now at ATFX's offices. We're going to provide you guys a market update as we usually do. There's some interesting things happening. I'm going to talk about that and sort of share with you levels where I think people are buying and selling. So look a little bit at the news that is driving the markets. And before we begin, though, as always, I need to stress that CFDs are complex instruments that come with a high risk of losing money rapidly due to leverage. And 71% of retail investors that trade with ATFX lose money. Uh, More on this on the homepage. Okay, I think we can kick off and we're going to begin with the euro versus the USD. So you should be able to see my screen and as well also hear my voice. Everything should be all good. If you have any issues, just let me know via the chat and in the question section as well. Also want to say hello to you guys. We have Don Holm in the chat. We have John Mitchell, Keith Jones, Marvin, Rich Bell, Vincenzo, and Zahid in the chat today. If you guys just want to join in the chat or you just want to say something, just put a little question there or just say something on the chat. Okay, I hope you guys had a good weekend, and let's begin. We'll take a look at the markets, and we're going to begin with the euro versus the USD. And as you can see here, guys, the market continues to trade slightly upwards. The action is not really here. Most of the action is in the stock market, as you know, but euro moving upwards, it took out this high here, which was the ECB meeting rate high, and the market is sort of moving upwards. And we have a bit of a trend, but it's not particularly strong. Since the market bottomed out here, the market is up with about 176 pip over a period of let me see here, a period of about 11 days. So the market is very, very slow moving. Again, moving upwards. You might see some resistance around 114.18, but because the trend is not really strong, I wouldn't be betting on this level to hold. But I think we can probably go a little bit upwards and then we'll just see what happens. From a tactical perspective, I think it makes more sense to sell and trade this on a break to the low. Alternatively, eventually trade to the upside. In general, currency markets and the dollar are just trading sideways. Here's a very good example showing you that situation. Is the dollar index, which is trading sideways between 94.99, which is the January low, and also happens to be the October lows from last year, plus resistance at 97.71, which is the 2019 high, which also happens to be the November highs and the December highs. So the dollar by itself is just trading sideways. Most of the action is confined to stock markets, with the S&P 500 trading to a new 2019 high today on the futures side, and it looks to be aiming towards this 2018 high. Again, as I put that little update on Twitter last week, I think the market is moving ahead of the or moving in line with economic data, where we're clearly seeing market data bottoming out, and then people being enthusiastic about a trade deal between the U.S. and Chinese governments. And again, if we have a solid trade deal there, what could happen is that it's going to be far more accessible for international companies to tap into the Chinese economy, and that itself, would help big companies in the S&P 500 to generate more money and, in other words, trade higher. And this is exactly what we're seeing here. As we're talking about stock markets, what are the sort of interesting levels? Well, we can flip to a 6-hour chart to get a little bit of a better understanding. I still like the breakup point. So we talked about the breakup point here on Friday, and before that even. This is sort of the entry level. If we go back down to the same levels at 28, 21, I think people are going to buy. I think even if we slide down to 2,800, I think people are going to buy. And I can't really see people being shaken out here as long as trade above 27.80, which is a level just above the March 12 low, which should be, I think, Monday's, not last week's low, on Tuesday here. It's not last week's low, but it's the low from Tuesday, from 1 week ago. So again, any sort of corrective move, I think people are going to look to buy. As for the German DAX, we shared several setups with you guys here lately. We talked about buying at 11,542 down here, and we talked as well about the breakout. I'm long myself, the German DAX, as we have as an interesting pattern. We have the head and shoulders, with the head being the December low, left shoulder being the November 20th low, and then the right shoulder being the February 8th low. And this pattern by itself gives us a target of 12,618. But I think if we can just go up to something like 12,474, then I think that's reasonable. Myself, I'll have take profit levels at 12,400 or so. I'm going to be tracking this, obviously, try to reduce stop loss orders as the market continues to trade upwards. So it's going up. I think it revisits sort of levels here, the lows from 18th of March. I think people are going to buy. If we would, for some reason, slide all the way down to something like 11,554, 547, sorry, I think people still going to buy. I think overall, sort of the market is bullish. It is, of course, possible to sort of work with tighter stop loss. If you don't want to work the stop loss down here, it's actually possible just to reduce the stops to this level down here, which is the original entry. Let me change here too. I picked this level because you have this set of lows here from last week, and then this level here, okay? So those are stock markets. So that's really where you want to be focusing on, I think. Again, Eurodollar is trading sideways. It's not a lot of activity. GBP versus the USD, as Theresa May now can't push forward her deal for a third time. They need to sort of figure out how to work things out there. Technically, this still looks like a head and shoulders with a big head here. Maybe this being sort of a left shoulder, this being a right shoulder, and this being the neckline. This market, but also other markets like GBP, Aussie dollar, look like they just want to see the GBP trade much, much, much higher. But people are sort of uncertain. We're about 10 days away from Brexit now, and they need to figure it out. It's going to be an extension or what's going to happen. And they need to be able to push this through Parliament as well. So it's not going to be easy. But, take out maybe last week's high. This is last week's high. Then we could potentially see push to the upside. If you really want to get involved as well, you want to go with sort of the trend, then the general idea is to be active and potentially buying dips around 130.80. So down here potentially, and just being bullish above last week's low. That could be something. And that's just buying these dips and pushing upwards. I'm not very enthusiastic though about this. I'm not trading it. I think it's too much noise with Brexit. As for the dollar versus the Japanese yen, it continues to maintain a bullish bias. We talked about buying here at 111.23. And I continue to stick with this trend. And as you know, I like to track and sort of go with the trend until the trend turns around. So I think we can reduce the trend of funding level a tiny bit to the low here, which is 10,000. Oh, sorry, 110.67. And for now, I maintain a bullish bias. With the S&P 500 trading upwards, it does make sense that this is going to trade higher as well. But the dollar is struggling a bit as per the dollar index, as I just showed you. As for gold prices, I maintain a bearish bias. So the idea last week was to sell here at the first fib level. This is 1,307.54. It's just a fib from the high to the low. So this is the first sell zone. As well, if you look at this, it looks like a head and shoulders. You can connect these two levels here. It's not the best quality, but you have this being sort of left shoulder, right shoulder, and then you have your head with a break to the trend line, and particularly 1276, potentially causing this market to trade substantially lower. which could make sense. I don't understand why people will be buying gold right now, given sort of the way stock markets are. So yeah, a bit of a head and shoulders, and then in general the market is being squeezed. So this is a low from 2015. You can pull this trend line like that, and then you have this resistance level. So the market is being squeezed here. So it looks like it wants to trade lower and then maybe later move upwards. Um, of course, every view has sort of, as I'm gonna give every view a bit of wiggle room and opportunity to develop. This trend, I'll give this opportunity to develop as long as trade below 12.28, 13.28. Trade above here, and we're probably are not dealing with the head and shoulders and not dealing with the downtrend anymore. Crude oil prices. We talked about this as well. I did a little update, I think, on the website as well. Both the German DAX and this, they're all sort of very slow moving. But we have a break here that occurred on the 13th. I think I put that on Twitter as well. So we got the break to the upside. We retested this several times. I think on the 4 hour, this could be viewed. I wouldn't necessarily call it a rectangle, but kind of. So double top, double bottom, and the difference here between these two levels gives you an indication of how much higher we can trade. So the difference is $2.96. So that gives you a target of 60.90. And we're going upwards. We retested these levels. I think now it's fair to reduce the trend of funding level a tiny bit, just below here. So for revisis 57.89, I think people still gonna buy, but stops goes here. If it goes down and then finally goes upwards, I think we can take the trend funding level. Just stick it here below the 15th of March low. And I think that's pretty much it. I think I covered all of the main markets. The only thing I didn't cover was Bitcoin. So let's take a look at that today. So here's your daily chart in Bitcoin, and Bitcoin is trading sideways here in this triangle, and it can really go either way. Triangles by themselves are not really good to trade. It's very difficult, but a break to something like 42.082, so 4,202 could potentially be something. We need to adjust this now, but it's sort of suggesting a lift, a push towards 5,282 on a break to the upside. Okay, do you guys have any questions? Just let me know. Sorry for sounding a little bit tired. Still dealing with the jet lag. I arrived yesterday here at 8 p.m. I was at the hotel here in Hong Kong, which is like lunchtime, London time. Okay, guys. If you have questions for me, just let me know. Otherwise, I think we're gonna wrap things up. I'm gonna be less activity on Twitter this week, as I am in Hong Kong. It's 5:45 p.m. over here now, so I won't be covering the markets during the European session. Just gonna do this market update for you guys and write an article or two for you guys. But otherwise, I'm not gonna be around. For any articles, if you haven't checked this out yet, on the homepage we have under analysis, we have technical analysis. So I published some of the setups there. We have that video on the stock markets, Brent crude oil, and a few articles here. More and more is going to come as we start to develop this little section here. Okay, so then we're going to wrap things up. I hope you like the market setup. Again, focuses on stock markets right now. Of course, maybe adding right now is probably not the best opportunity. Maybe in the DAX, something to work with. Other stock markets as well. You can check out the Hong Kong stock market. That's looking interesting as well. Just need to look around, sort of see for setups in stocks. That's what I would do, because the market got it wrong. All financial professionals got it wrong, and especially Twitter Finance got it totally wrong. There's so many perma bears and so many bearish people out there. So been calling for a market plunge, and yeah, we got that market plunge, and you can make some money on that. But to consistently be bearish, it's not really professional or good. One needs to be clever and understand when you got it wrong. And guys, I made some money on the decline in stock markets last year, so obviously I was bearish as well, but I didn't. I did try to trade once on the short side. One shorted Nasdaq 100, closed that out early on, and since then I actually been looking for buying opportunities, and I did, as I just mentioned here, buy a bit of German DAX, but I have also in the past bought Spanish stock market as well. Okay, gonna wrap things up, guys. Thanks so much for joining me, and if you have any questions, let me know. You can always reach out to me via Twitter at AlexFX00. As well, if you're in the chat here, you can see my contact details, which are alejandro.zambrano@atfx.com. Thank you very much.